Kia ora and welcome to the latest Need to Know update from the assurance team at the External Reporting Board. Today's session is being recorded and today's slides will be made available following the session. So please don't take too many notes. You can watch and learn, and then the slides and the recording will be available to download shortly on our website. I think we probably have enough people coming through now to commence. There will be some latecomers, but I think we should probably get underway because we do have quite a lot to cover today. So for those of you who don't know me, my name is Misha. I'm the director at the XRB. I'm leading the assurance team, and I'm really glad that you will see all of our assurance team members present to you today on the various topics that they've been working on. What will the agenda cover today? So the way we've structured our agenda is to first of all start with a reminder around some of the standards that are applicable now. Then we're going to cover the latest in our the latest standard that we have issued, the review standard on service performance information. But a large chunk of today is going to be giving you updates around some of the key projects that are going to be coming your way in due course. And then we'll wrap up towards the end. Please do drop any questions that you have into the Q&A. We may have time towards the end of the session to get to those, so feel free to drop them in at any time and we'll try our best to get through to those at the end. For any that we don't have time to today, we'll make sure we respond to you separately. Okay, so without further ado, I thought we'd start today's session with a bit of a picture. So the picture on this slide is a sort of diagram of the assurance standards that we've issued. So as a quick reminder, we issue the quality management standards as well as the ethical and independence standards. These are the standards that override all of our assurance engagement standards. We then have a number of engagement-specific standards. So on the left of the slide, you've got those standards that deal with historical financial information. Those are the audits and review standards. In the middle, we have other assurance engagements. Historically, this has covered everything that is not about financial information. So we've got the control engagements and other things sitting in that middle bucket. There is a significant amount of focus on that middle bucket at the moment as reporting expands to cover non-financial information. And so that will be an area that we'll focus on a little bit today too. And then to the right, we have our related services standards, which includes our agreed upon procedures standard. For standards that are not assurance related, the XRB's assurance team does not set those. And maybe your other professional bodies have standards that apply in that space. So that's just a quick context for some of the standards that we'll talk about today and where they might fit in the bigger picture. Next, we're going to move on to and cover the standards that are now applicable. So very briefly, I just want to remind you about 3 standards which we have covered in previous Need to Know updates, which are now applicable. So these include the revisions to the public interest entity in the Code of Ethics and related conforming amendments that apply and impact on your auditor's reports. In addition, the amendments related to technology in the ethical and independence requirements are now applicable. Next, I'm going to hand over to Karen, who's going to remind you about another standard that is applicable now.
Thank you, Misha. So today I wanted to talk to you about NZSAE1 and the recent amendments that have been made to the standard. So NZSAE1 is our temporary domestic standard that was originally issued in August 2023. And it was issued for the purposes of assuring the greenhouse gas disclosures in the climate statement. This standard allows the use of 2 international standards. These are NZISAE 3410, which is the standard for the assurance of GHG statements, and ISO 14064 Part 3, 2019, which is the specification with guidance for the verification and validation of greenhouse gas statements. NZSAE1 includes the requirements for the assurance required by the Financial Markets and Conduct Act over the GHG disclosures required by the Aotearoa climate statements. These climate statements require entities to obtain a minimum of limited assurance over their greenhouse gas disclosures that are included in their climate statements. These greenhouse gas disclosures cover Scope 1 emissions, these emissions being direct emissions from sources such as fuel combusted by vehicles owned by the entity, Scope 2 emissions being indirect emissions from purchased electricity, and Scope 3 emissions being indirect emissions from the entity's supply chain or value chain. So this includes purchases made by the entity through to the distribution of products and any emissions from the disposal and use of those products. In October 2024, the XRB consulted on some amendments to the adoption provisions included in NZCS2 of the Aotearoa Climate Standards. Two of these amendments related to assurance, and these are the two that I want to talk to you about now. The first amendment allowed the extent adoption provision, providing exemption from the disclosure of Scope 3 GHG emissions reporting to be extended to cover the second year of reporting, meaning that entities are not required to disclose their Scope 3 emissions in 2025 if they choose to use this provision. The second adoption provision allows an entity to exclude its Scope 3 emissions disclosures from the scope of an insurance engagement for the second year of reporting. This means that an entity could choose to disclose their Scope 3 emissions, but would not be required to obtain assurance over these if they chose to use this provision. Additionally, at the XRB, we are continuing to monitor and provide implementation support for this new assurance regime. This is particularly in the area of Scope 3 emissions. And the first area of this planned guidance that I want to talk to you about is intended to be a guide to support both preparers and assurance practitioners in the preparation and assurance of their Scope 3 emissions. We appreciate that this is a new area for many practitioners, and we want to provide guidance and support. And the first area that we have identified that we will talk about is data uncertainty and trade-offs. And this is intended to cover the different considerations made by preparers and assurance practitioners as they navigate the choice of measurement methods allowed by the measurement criteria. And I will now hand over to Anna to talk about some more areas of guidance.
Thank you, Karen. So the first thing I will talk about is the explainer. We issued explainer about GHG assurance reports in February this year. This explainer is for readers of climate statements. It highlights what to look out for in the assurance reports on greenhouse gas emissions disclosures, which are included in climate statements prepared by climate reporting entities. This guidance is for those who are not assurance practitioners, so they might not have a thorough understanding how an assurance report on greenhouse gas emissions differs from traditional audit report. So our guidance includes some information for them. We explain that various entities might have various types of information assured. Some will have only parts of greenhouse gas disclosures, some will have all greenhouse gas disclosures, some might have also other parts of climate statements assured. There will be also different level of assurance. The legislation requires only limited assurance over greenhouse gas disclosures. However, some entities might ask the assurance practitioners for reasonable assurance or mixed assurance, which is limited over some parts of disclosures and reasonable over other parts of disclosures. Our explainer includes also information that there might be different types of conclusions and what this and how to understand them. This is put in the context that greenhouse gas measuring and reporting, even though some say that it's like 10 or 20 or more years old, actually it's like a baby comparing to financial reporting and accounting debit and credit, which is with us for many centuries now. And finally, assurance reports may include other information of interest to the readers. There might be useful information found in key matters, emphasis of matters, other matters, a paragraph, and we are linking this, directing the readers of the assurance report to this paragraphs to check if they can find important information for them. So this guidance is included on our website, and if you know a climate statement reader that you think would be interested in learning more about assurance reports, feel free to refer them to the explainer. And now I will talk still about GHG, but slightly different topic. And this is the snapshot of our monitoring. So we are very interested in what is happening with greenhouse gas assurance. Who is doing this? What standards are used? What level of assurance? And what any other information is included in assurance reports currently. This slide provides just a snapshot on some selected data that we captured in the first year of climate statements. During this first year, assurance was not mandatory, and for almost 250 climate statements, 28 had their greenhouse gas emission disclosures assured, and it was voluntary assurance, and 5 of those 28 climate statements included assurance of greenhouse gas emissions in accordance with our NZED SA1 assurance engagements over greenhouse gas emission disclosures. In those almost 250 climate statements, there were also other 44 that mentioned that the greenhouse gas is assured, but the assurance was not over disclosures, but over a separate report, which in professional jargon is called greenhouse gas inventory report. But looking at this 28 that had the disclosures in climate statements assured, we can see that mostly assurance was done by financial statement auditor. However, it was mainly other assurance practitioners who started applying, early adopting our NZED SA1. We can see also that mostly New Zealand version of international standard on assurance engagements relating to greenhouse gas was used, but ISO standard on greenhouse gas assurance was also used. And finally, currently, greenhouse gas emissions are assured mostly to limited level of assurance. However, this is still early stage and this was not mandatory. We are keeping learning and watching approach now because we are very interested to see what is happening now in the current year, which is the first year of the mandatory assurance. So I think it was a lot of information about greenhouse gas assurance. So now we will move to the next section of our webinar, namely recently issued standards, and I will pass to Lisa.
Thanks, Anna. Hi, everyone. So today I'm going to talk to you about a new review standard for service performance information. But before I take you through the new standard, I thought I'd just give a wee reminder about what I mean by what is service performance information. So service performance reporting is reported by public benefit entities that are required to follow the External Reporting Board's accounting standards. And it requires an entity to provide information about why the entity exists, what it broadly intends to achieve over the medium to long term and how it goes about this, and information about what it has done during the period working towards those broader aims and objectives. So assurance practitioners have been undertaking reviews of service performance information using these two documents on your screen. So the first one is ISAE New Zealand 3000 Revised, which is the assurance standard for non-historical financial information, and EGAU 9, which is a guidance document for the audit or review of performance reports for Tier 3 charities. So essentially it's a guide for how to apply 3000 to a performance report. However, the XRB has now issued a new review standard that specifically deals with the review for service performance information. Its name is NZSRE1, and it's applicable for accounting periods beginning on or after 1 January 2026. And at this time, ISA NZ 3000 Revised will not be applicable for service performance information, and EGAU 9 will be withdrawn. Alongside the standard, we also issued an explanation of decisions made, which takes you through the decisions that we made following the NZSROE consultation on the exposure draft. And this can be found on our website alongside the standard, and I've provided the links here for you on the screen. So why did we issue a new standard? So in New Zealand, under the Charities Act, Tier 1 and Tier 2 charities are required to have an audit. However, Tier 3 charities with operating expenditure between 550k and 1.1 million have the option for either an audit or a review of their performance report. And that performance report contains both financial information and service performance information. The review engagement standards that had been issued by the External Reporting Board, they address the historical financial information. However, there was no review standard to specifically address the service performance information. Due to the statutory requirement, when we were scoping the standard, we had Tier 3 charities in mind. So when deciding what to include or exclude from the standard, for example, we thought about what an assurance practitioner may need to perform one of these types of engagements. So looking at some of the key benefits of the standard, so it has an integrated approach. And what I mean by that is it's applied concurrently with the review standard for financial information, for the historical financial information. And this is because these types of engagements should be as approached as one engagement over the entire performance report. It is also specific to service performance information. So we thought long and hard about what is particularly relevant to service performance information, or due to the nature of service performance information, what may require a different approach by the assurance practitioner than they would use when doing a review of financial information. A good example of this is materiality. And having recently revised the auditing standard for service performance information, we applied some of the lessons that we learnt there, and we've applied the language and concepts, such as adopting the two-step approach that is used in the auditing standard, which I'll take a look at shortly. I just want you to know a key focus of the standard was to ensure that the requirements are suitable for a limited assurance engagement. And we gave a lot of thought of this from planning right through to reporting on have we got the balance right for a limited assurance engagement. So let's take a look at that two-step approach I mentioned. So service reporting requirements are far less prescribed than they are for financial information. And the reporting requirements enable the organisation to determine how it selects, measures, and presents its service performance information. And this may result then in service performance reporting between even similar entities and similar industries to be different. For this reason, NZSRE1 requires a two-step approach to assuring service performance information. So step one is where life differs from a review of financial information, in that firstly, the assurance practitioner needs to consider whether anything comes to their attention that the service performance information does not present fairly in all material specs, and that the what has been reported is not appropriate and meaningful. This requires the assurance practitioner to have a really good understanding of the entity in order to apply their professional judgment in making this assessment. So before diving into step two, the assurance practitioner needs to think about the what has been reported. So the review standard takes the assurance practitioner through a number of factors when making this assessment and considering whether the information is appropriate and meaningful. For example, It looks at how it relates to an element or aspect of service performance information that contributes significantly to the entity's core purpose. For example, if a measure is about an event, how does that event relate to the entity's purpose? It thinks about, is it likely to meet the needs of the intended users to make an informed assessment of the entity's service performance? And does it present, say, a neutral view, including both positive and negative significant aspects? For example, if they've disclosed survey results, how did they make that the selection on what survey results to disclose? To recognise the work effort for a review engagement, NZSRE1 requires the practitioner to only consider these factors, and this is different to an audit where they're required to evaluate those factors. So having completed this first step, you move on to the second step, where the assurance practitioner will assess whether anything has come to their attention that the information does not fairly reflect the actual service performance and is not materially misstated. The second step is what will be more familiar to you from a review of financial information. So for further information on NZSRE1, I'd encourage you to take a look at a recording of a deep dive that we recently did, which is now available on our website, and I've included the link here on the screen for you. Just a reminder, its application is for accounting periods beginning on or after 1 January 2026. However, early adoption is permitted. Once mandatory, 3000 will not be applicable for review engagements of service performance information. So it's time to think about what needs to be done to implement this new standard, such as updating your templates, firms' methodologies, and staff training. I just wanted to finish off this section by saying we are aware there are a number of challenges around the reporting and assurance of service performance information. And the XRB has been proactive in addressing these challenges, and we have an active project to support both the preparation and the assurance of service performance information. And this includes drafting guidance on the assurance of service performance information, which will particularly look at obtaining evidence, and consulting with users and peers and assurance practitioners on these challenges. Thank you for your time today, and now I'll hand over to Misha.
Thank you, Lisa. So just a quick pause here to update you all. I know various of our presenters have spoken about links. We will drop those links into the chat in due course, so there will be ways to access those. We will also make those slides available following the webcast, so you'll be able to access those links through there. But just to let you know, those links are coming through in the chat, and there will be a way to access them in due course. What we're going to do next is we're going to turn into our updates, and there are quite a few areas where we want to update you on. At the start of the presentation, I mentioned that there is activity in that middle box over the assurance over sustainability and non-financial information. So what we thought we'd do today is give you a bit of an update as to what's happening in that space. There have been 3 international standards that have been issued since over the summer. Pretty much. These have been issued by the International Auditing and Standards Board or the International Ethics Standards Board. There are other international standard setters who are also currently working in this space. We are monitoring the uptake of these standards globally as well as locally, and we intend to consult in due course about whether New Zealand should adopt these and potentially if we should amend them for our local context. What's driving this kind of watch and wait approach is a number of international developments. For those of you who are following this space, you'll know, for example, that there have been significant changes coming out of Europe in both the reporting and assurance regimes. Across the Tasman in Australia, climate reporting is mandatory for some for this current year, and the Auditing and Assurance Standards Board in Australia has actually opted to early adopt the 5000 standard, which is one of these on the slides. So we are very much aware that people are wanting to know what is the XRB going to do in this space. The New Zealand Auditing and Assurance Standards Board has been monitoring these standards for quite some time, and we will continue our deliberations at the board meeting next week. What we are hoping to do is to progress to issue a consultation document in due course to seek your views around what we should do with these standards in New Zealand. I note that the applicable date of these international standards is for periods beginning on or after 15 December 2026. So we do have time to seek your views and consult before we make final decisions. Now I'm going to hand over to Karen, who can talk you through a little bit about the things that we are thinking about in each of these three spaces.
Thank you, Misha. So to start, I'd like to talk to you a bit about ISA 5000, which is the standard for the assurance of all sustainability information. And first of all, to talk about the scope of this standard, which is broad. So this standard can be used for the assurance engagements for greenhouse gas inventories, right through to the voluntary assurance of sustainability information in the climate statement. To those of you who are familiar with 3000, the standard for the assurance of non-financial information, the format of the standard will look very familiar, and it covers all aspects of the sustainability assurance engagement, from engagement acceptance and continuance to forming the assurance conclusion and preparing the assurance report. It represents the most up-to-date international thinking on sustainability assurance. There are a few new areas that I would like to highlight in this standard that might be relevant for considerations for the assurance or voluntary assurance of the climate statements. So the first of these is the value chain. And I mentioned value chain slightly earlier in the presentation. So ISA 5000 does not define value chain, as this is dependent on the reporting standard used, but it does include concepts around value chain components that are entities outside of the group reporting boundary and are included as entities that are part of the reporting entity's upstream or downstream value chain. There's also a new concept of one-to-many reports. So this is new in ISA 5000, and it was informed by requirements that exist when auditors rely on the reports of controls from service organisations for financial statement audits. But these reports are broadened so as not to solely focus on controls. It also includes group considerations that may be helpful if voluntary assurance over the climate statements is sought. So now to move on to the second of the recently issued standards, and this is the Independence and Ethics Standard for Sustainability Assurance. This is the IESA, or Part 5. So these new requirements in this new Part 5 are based on the Extant Code of Ethics. So the format will be very familiar if you are familiar with the Code of Ethics. It covers ethics and for sustainability reporters, and ethics and independence considerations for sustainability assurance. The independence requirements in Part 5 are based on Part 4A, so they are the same level of independence as required for financial statement audit. And there are similar requirements to respond to non-compliance with laws and regulations in Part 5. But Part 5 also includes additional communication requirements between sustainability assurance practitioners and external auditors. Non-assurance services are also included in Part 5, and these mirror the services that are currently included in Part 4A of the Extant Code. And there are requirements for long association of personnel that mirror the audit rotation requirements. And these additionally introduce circumstances where an individual could be involved in a combination of audit and sustainability assurance engagements for the same client. In these circumstances, the roles on both engagements need to be included into considerations of familiarity threats and calculations of time on and cool-off periods for individuals working on sustainability assurance engagements. The final standard in the suite of three that I want to talk about is use of experts. More assurance practitioners and sustainability assurance practitioners may be intending or using or intending to rely on the work of external experts, given the scope of sustainability assurance engagements. So in recognition of this, the IESPA issued an amending standard to the Code of Ethics addressing the use of the work of an external expert. So these new provisions require the steps shown on the screen. In summary, they will require the practitioner to agree the terms of engagements with the external expert, then evaluate the external expert's competency, capabilities, and objectivity, obtain certain written information on the external expert's objectivity, conclude on their competency, capabilities, and objectivity, and not use the work of the internal expert if the practitioner determines that they are not competent, capable, or objective. So now I will hand over to Bruce to talk a bit more about some other amendments for use of experts.
Brilliant, thanks, Karen. So in response to the IESPA standard that Karen's just talked about on using the work of an external expert, the IAASB are going to issue an exposure draft with targeted amendments to the auditing standard ISA 620, using the work of an external expert, the assurance standard ISAE 3000 revised, the review standard ISRE 2400, and the agreed upon procedures standard. Now, these amendments are not really major. They'll just provide a bridge between the Code of Ethics and these assurance and other standards, essentially providing a signpost from the assurance and other standards back to the Code of Ethics when an assurance practitioner is using the work of an external expert. So just really, when you're using the work of an external expert, consider what's in the Code of Ethics alongside what's in your the assurance standards. In summary, the requirements to ISA 620 require the auditor to consider the provisions of relevant ethical requirements related to using the work of an external expert when determining the nature, timing, and extent of the auditor's procedures. To those other standards that I mentioned, there'll be content added to the application material that relevant ethical requirements may apply when using the work of an external expert, or relevant ethical requirements may prohibit the practitioner from using the work of an external expert when they are not capable, competent, or objective. These proposals will be discussed at the next NZAUASB board meeting, and we're waiting for the IAASB to publish an exposure draft, so watch this space. Now, let's change topics completely and look at the ISA for LCE. So this is the auditing standard for less complex entities. So while the current auditing standards are scalable, we have heard concerns that these standards are getting increasingly long and complex and are written in this context of highly regulated large listed entities. And the ISA for LCE is really aimed at addressing these concerns. As a reminder, it's a standalone standard that's been written in a way that's proportionate and tailored to the needs of an audit of a less complex entity, or an LCE. Most importantly, it provides the same level of assurance as an audit performed under the current auditing standards, or the ISAs, that is, reasonable assurance. Now, we undertook consultation between November and February, and big thank you to all those who took the time to send in a submission, participate at one of our virtual events, or watch a YouTube video of us. We greatly appreciate all the feedback that we received during this time. So what did we consult on? Three main areas: whether to adopt the standard in New Zealand, we looked at the applicability of the standard, and if and how to incorporate the audit of service performance information within the New Zealand standard. What did we hear? So we explored the costs and benefits of adoption. What we heard were benefits do outweigh the costs. There are auditors out there, particularly in those small to medium-sized audit firms, that see great benefit in us adopting the standard, and they will use this standard. Of course, acknowledging that there will be some who won't. We reached out to users and preparers of audited financial statements, regulators, other government agencies, and they expressed their support in this standards adoption. Same with the Office of the Auditor General. In regards to applicability of the standard, so we proposed specifically prohibiting the FMC reporting entities with higher levels of public accountability. So you think of credit unions, building societies. So there was support for that. And that'll be alongside what's already in the standard. So listed entities, deposit takers, insurance companies. So any of those types of entities, you can't audit them with the ISIF LCE. In regards to the quantitative threshold, so we've proposed not having a quantitative threshold because it's not really an indicator of complexity, and there was support for that. In regards to service performance information, there was agreement with the inclusion of Part 11 to enable the audit of service performance information within the standard, and some suggestions have been provided, some minor suggestions regarding the drafting, which we will take a look at. And a summary of what we heard will be published on our website in due course. So the next steps. So I'll be presenting our findings at the NZAUASB board meeting. They'll consider all the feedback received in their April meeting, which is next week. We're expecting a board decision sometime this year. And if it is adopted, likely applicable period will be periods beginning on or after 15 December 2025. But do keep an eye on our newsletter for further information. And now I'll hand over to Sharon.
Thanks, Bruce. So we're now going to move back into the big book of auditing standards. And the XRB has been progressing some revisions to the auditing standards on going concern and fraud. So there are three main reasons for revising these standards. The first relates to the expectation gap. So trying to address that gap between what the public perceives as the auditor's role and the actual responsibilities of the auditor. Secondly, to try and meet growing demand from stakeholders, including investors, regulators, and the public, for more robust and transparent auditing standards. And thirdly, environmental factors. So fraud and going concern have both recently been thrust into the spotlight. If you think back to 2018-2019, there were a number of significant high-profile corporate failures, which resulted in reviews in some jurisdictions of corporate reporting and audit. And now, given the current economic environment, going concern is particularly relevant. So what might you expect to see in a revised going concern standard? There are three main areas that I would like to focus on. The first area is the risk identification and assessment. And the risk identification and assessment under a revised standard will be more robust, revising the going concern standard to more closely align with the risk assessment standard and incorporate key concepts as well as structural elements from that standard. In performing the risk assessment, the auditor needs to be thinking about going concern. What are the risks to going concern for the entity? And what we heard in our outreach is actually that a number of practitioners are already doing this. The next area to highlight is the auditor's evaluation of management's assessment. Accounting standards require management to make an assessment about the entity's ability to continue as a going concern. The auditor needs to evaluate that assessment. The nature and extent of the evaluation is tailored and it's based on the risk assessment, but in all engagements, the auditor would be required to evaluate management's assessments. Now, if management has not made an assessment, the auditor needs to ask management firstly to make the assessment, and if management refuses, then the auditor will need to consider the implications for the engagement. And the last area to highlight deals with changes to the auditor's report that are designed to enhance transparency for users. So a revised standard would introduce a new section in the auditor's report under the heading Going Concern. So that means all audit reports will either have a going concern paragraph, or if applicable, it would be a material uncertainty paragraph. In the going concern paragraph, the auditor will need to state, in the context of the audit engagement of the financial statements, the conclusion that the going concern basis is appropriate. In addition, for audits of certain entities, and in New Zealand, this will apply to FMC reporting entities considered to have a higher level of public accountability, if events or conditions exist that may cast doubt on the entity's ability to continue as a going concern, then the auditor also needs to describe how they evaluated management's assessment. So that's a very brief summary of what you could expect to see coming through for a revised going concern standard. I'll now move on to fraud. So we take a look at some of the changes you can expect to see in the fraud standard. Throughout the engagement, we've got key themes of professional scepticism and communications that underlie the audit process. Revisions to the standard would reinforce that throughout the audit, the importance of professional scepticism. So that's being alert to the possibility of fraud, being alert and investigating inconsistencies in responses to inquiries. And there's also a focus on ongoing communication about fraud at appropriate times through the engagement. So not necessarily waiting until the end of the engagement to communicate in a robust way with those charged with governance. The next is the auditor's responsibility with respect to fraud, and that responsibility has been clarified. So it's important to note here that the responsibility has not changed. The overall objective of the auditor is still to obtain reasonable assurance about whether the financial statements as a whole are free from material misstatement, whether due to fraud or error. So the auditor has a responsibility to plan and perform the engagement with fraud in mind. There are inherent limitations that make finding fraud hard, but that doesn't change the auditor's responsibility. And so bifurcating the discussion about the auditor's responsibilities and the discussion about the inherent limitations of the audit help to make this responsibility clear. So the next area is risk assessment. And like the going concern standard, the risk assessment in the revised fraud standard would align with the risk assessment standard. What the auditor is doing in the risk assessment is applying what we call a fraud lens, thinking about how the entity might be susceptible to fraud, both through misappropriation of assets and fraudulent reporting. And the intention here is to integrate the thinking about fraud into the risk assessment. Thinking about fraud is not something that you do after risk assessment, it is part of the risk assessment. And again, our outreach actually indicated that this is already happening in some cases in practice. So next, what happens when the auditor actually finds fraud or suspected fraud? The auditor's response is proportional, and that's based on your risk assessment, as well as obtaining an understanding of the fraud. And then, so for all frauds or suspected frauds, the auditor needs to obtain an understanding of them. And based on that understanding, then will determine the additional procedures to be performed. Those additional procedures will need to be performed unless, based on the understanding, the auditor determines that fraud is clearly inconsequential. And the final area I'd like to highlight is about the enhanced transparency in the auditor's report. And these enhanced transparency requirements would apply only to certain entities, and they use the key audit mechanism, or KAM mechanism, which in New Zealand applies only to FMC reporting entities considered to have a higher level of public accountability. So the auditor will need to determine from matters communicated to those charged with governance, which of those required significant auditor attention and therefore need to be reported as key audit matters. There is a strong expectation that in most reports there will be key audit matters related to fraud, and also a strong expectation that those key audit matters will be bespoke to the entity and not boilerplate or standardised statements. And when the auditor does communicate a key audit matter related to fraud, it needs to be under an appropriate heading that signals it is about fraud. So what are our next steps? The NZAU-ASB has agreed in principle to adopt the revised going concern standard. It considered that one at its February 2025 meeting, and we'll be considering next week whether to adopt the revised fraud standard. If adopted, both these standards would be applicable for financial statement periods beginning in December 2026, so for 2027-2028 audits. Now I'm going to hand over to Karen, who will provide you with an update on one of the Ethics Board's newest projects. Thank you.
Thank you, Sharon. It's my pleasure to talk to you today about a very narrow scope consultation paper. This paper is relevant to auditors of investment schemes and pension funds, and it's been released this week, so it's a very new consultation paper by the International Ethics Standards Board. So this paper is a request for more information specific to those investment schemes and pension funds. So the IASB started the collective investment vehicle project as it identified that the definitions of related parties and audit client in the Code of Ethics might not capture certain parties. These are parties that may be responsible for the decision-making and operation of an investment scheme, or parties that may be able to substantially influence the scheme, or parties that could exert significant influence over the scheme's financial records or financial statements. The situation is considered to be relevant just to investment schemes, as these schemes often have limited employees, and the functions that may be carried out by employees in a typical operating company are often carried out by other parties in an investment scheme. The consultation paper is seeking to answer the question as to whether relationships with third parties would be appropriately assessed for independence purposes under the current provisions in the Code. So we are intending to seek feedback from all interested and affected stakeholders. So please keep an eye on our website and newsletters, and to undertake targeted interviews with interested parties on this particular consultation paper. And now I will hand over to Misha to wrap this session up.
Great, well, thanks team. I think that was a great update and we've covered quite a bit, so I'm sure people are reeling with a significant amount of information. If you do have any questions that you wish to pose to the team, we do encourage you to pop them into the Q&A at this point and we'll do our best to answer those. But while you're thinking of those questions, maybe a couple of reminders from me. So firstly, just to remind everybody that there is obligations under various pieces of legislation that the auditors are required to submit modified assurance reports through to the External Reporting Board. A couple of key new ones to highlight here is the introduction of the same requirement under the Incorporated Societies Act and a similar requirement under the Financial Markets Conduct Act. So if you are the auditor of an incorporated society, or if you are doing that assurance over those greenhouse gas emission disclosures, if you are issuing a modified assurance report, please don't forget to hop onto our website and submit that modification through to us. It's quite easy to do. We just need to make sure that you don't forget to do it, please. We're really interested to see if there's key themes coming through on those modified reports, and that's sort of the purpose behind that. Onto the next slide, there's a couple of other final reminders that I'd just like to highlight today. Number one, we have recently, but not too recently, updated the auditor's responsibilities web pages. So I know that many auditors use those links and include that link in their audit report to describe those auditors' responsibilities. We have new standards applicable now related to group audits as well as the revised Service Performance Information Standard, which have slightly tweaked those auditor responsibility paragraphs. So we have reflected those updates and those tweaks within those web pages. So there are now quite a number of different web pages to select from, and we just wanted to remind everybody that that has been done. So please do go and check those links and make sure you're using the right link depending on which version of the applicable standards have been applied for that period's audit. The second thing to highlight is to encourage you, if you have not yet done so, to hop onto our Standards Navigator. This is a new development where we have put all of our standards into an HTML version. It makes searching these standards so much easier, and we're also hoping it helps you to navigate between requirements and application material easier. So please have a go, let us know what you think. That's us trying to help you and make our standards more accessible. And then the final update or reminder is just that we do have a web page which we keep up to date and just provides a sort of overview of all of the recent approvals so that you can at any time go in and just check what is the most recently issued assurance standard if you were wondering if there was anything new. So those are just some reminders. Please continue to join us for our regular Need to Know updates, and please do continue to circulate any questions that you might have arising from today. At the moment, I don't see any coming through, but we will give you a minute. If you did want to pop any question in there, happy to answer that. Oh, and I think Karen Griffin, thank you very much. I think you've just popped everything into the chat, which includes all the links. So if there was any sort of the links that we've mentioned, those are available now in the chat. So one question coming through is related to Lisa's update on the review standard for service performance information. And the question is whether the review standard is only applicable for Tier 3. So now, Lisa, if you want to hop on and answer that one.
Yeah, sure. Thanks, Risha. We scoped it with Tier 3 entities in mind because there is a statutory requirement for those entities, but no, it's can be applied to any review engagement for any tier if need be. Yeah.
Thanks, Lisa. And thanks for the question. Any other questions for us while you've got the team standing by? Another question related to reviews or limited or reasonable assurance. I think this was one we get quite often. Is there a choice to the entity to decide review or reasonable assurance? So I think it would really depend on the size of the entity. So if you're a charity, there are the sort of statutory obligations around who is required to have an audit. And then that Tier 3 group, there are some Tier 3s who can opt to have an audit or a review in terms of the Charities Act requirements. But for voluntary assurance, if you aren't caught by statute, then it's entirely up to the entity about the level and scope of assurance that's required. All great questions. Hopefully that's clarified things. Anything else? Don't see any further questions coming through. Oh, okay, so another one. Oh, we've got people warming up now. What's the impetus for the changes to the going concern and fraud changes? And what difference do you believe it will actually make? Sharon, I don't know if you want to hop on and answer that one.
Right, so first I have to turn my camera back on and unmute myself. So you'll recall that I went through sort of the main drivers. We're really looking at a lot of it is trying to ensure audit quality. The auditor always gets blamed when something goes wrong. So if the entity fails, and if, whether due to fraud or if it's a going concern related matter, why didn't the auditor find it? Why didn't the auditor know? So it's really just trying to strengthen the requirements around what the auditor does in respect of fraud and going concern, but also trying to communicate more clearly through the auditor's report what the auditor's done. And so it's that public interest issue behind that, I think driving the change.
Thanks, Sharon. And I think I'll just add, this is an area which the Financial Markets Authority also highlighted in their recent audit inspection sort of report. It's obviously such a key area in terms of public interest. So I guess my sort of takeaway as to what is the difference it will actually make, I sort of really take comfort from our New Zealand member on this international board, Greg Solomon, who sort of basically describes these changes as making sure the auditor is really kicking the tires hard on two key themes which are really serving the public interest. So yeah, it's really making sure that auditors are kicking the tires hard on these two key matters. Hopefully that answers your question. Okay, so as I've mentioned, the recording and the slides will be available on our website. You will also see our contact information there. So if you have got any further questions arising from the update, please do feel free to reach out and get in touch. Otherwise, thank you again for joining the team, and we hope you enjoy the rest of your day. Mā te wā.